The global economy is teetering on a knife's edge, with potential interest rate cuts hanging in the balance. All eyes are on the upcoming week as critical economic data floods in, promising to either calm investor nerves or send markets into a tailspin. Let's dive into the key events and data releases that could shape the future of FX and bond markets. U.S. data deluge after shutdown. Will the Fed blink? The dust has settled from the U.S. government shutdown, but the aftershocks are still being felt. Investors are anxiously awaiting the delayed release of crucial economic data, and everyone's asking the same question. Will the Federal Reserve cut interest rates next month? The market's initial relief quickly turned cautious as uncertainty mounted about the timing and reliability of the data, especially key jobs figures. Two major government reports, focusing on October's inflation and labor market performance, are potentially lost forever, according to White House Press Secretary Caroline Leavitt. This information vacuum adds another layer of complexity to an already uncertain situation. Remember that the Fed recently cut interest rates, but Chair Jerome Powell emphasized that a December rate cut was not a certainty. Since then, various Federal Reserve members have voiced conflicting opinions, with some suggesting rates could remain unchanged. U.S. money markets are currently pricing an almost 50-50th chance of a rate cut in December, according to LSEG data. But here's where it gets controversial. Could the Fed be intentionally sending mixed signals to manage market expectations? As FP Markets chief market analyst Aaron Hill put it, it is no secret that the Fed remains divided and cautious. NAGA market analyst Frank Walbaum added that expectations for a Federal Reserve rate cut next month have been pared back significantly, which could provide some support to the currency and yields. Recent U.S. jobs data from ADP and Challenger have been surprisingly weak, sparking fears of a potential economic slowdown. And this is the part most people miss. These concerns, coupled with policymakers' cautious statements, could leave the dollar vulnerable to further declines, especially if upcoming data disappoints. The direction of the dollar will likely hinge on the strength or weakness of the incoming numbers, according to Walbaum. The week's highlights include the release of the minutes from October's Fed meeting on Wednesday. Investors will dissect every word for hints about the Fed's future policy intentions. We'll also see purchasing managers' figures and the University of Michigan's final consumer confidence survey for November on Friday. Canada, inflation in the spotlight. Canada will release its October inflation data on Monday. The Bank of Canada's, BOC, last meeting minutes revealed that inflation exceeded their expectations in September, rising to 2.4%. While the BOC cut rates by 25 basis points to 2.25% at that meeting, some policymakers advocated for holding off on further cuts to better assess inflation risks and labor market weakness. Monday's inflation report will be a crucial indicator of which direction the BOC will take next. Could a surprisingly high inflation number force the BOC to reconsider its easing stance? Eurozone. A week of PMIs and forecasts. The Eurozone faces a relatively quiet week in terms of data releases. The flash estimate of Eurozone PMI data for France, Germany, and the Eurozone itself will be the main focus. The European Commission's autumn economic forecast for the EU will also be released on Monday. Other notable releases include German Producer Price Index for October and the Eurozone Flash Consumer Confidence Indicator for November, Thursday, as well as France's monthly business survey and Spanish industrial orders data, Friday. Investec's Sandra Horsfield noted, "We see more scope for an improvement in the Eurozone than in the UK as political uncertainty was dialed down in France at the same time as budget fears mounted in the UK." She also highlighted that longer term, both countries face clear fiscal consolidation needs. Several Eurozone countries will also be holding bond auctions throughout the week. UK, budget buzz and inflation anxiety. In the UK, attention will be on any further commentary surrounding potential measures in the upcoming UK budget on November 26th, as well as the release of UK inflation data for October on Wednesday. The Financial Times reported that the Labour government has abandoned plans to raise income taxes, leading to a rise in gilt yields and a decline in the sterling. MUFG Bank analyst Lee Hardman suggested that the decision to drop the income tax hike could be viewed as the Labour leadership prioritizing their popularity with the public and the stability of the Labour Party overdoing what is best to restore confidence in the public finances. Beyond the budget, the UK inflation data will be a key indicator for investors seeking clues about whether the Bank of England (BOE) will cut interest rates again next month. This comes after recent weak jobs and gross domestic product data. UK money markets are currently pricing an 84% chance that the BOE will cut rates next month, according to LSEG data, although some analysts anticipate that rates won't be reduced until February. The UK also plans several gilt sales by programmatic tender in the coming week, including a 2030 gilt on Tuesday and a 2052 gilt on Thursday. An auction of the October 2035 gilt will take place on Wednesday. Hungary, Scandinavia, and South Africa. The Hungarian Central Bank will announce its policy decision on Tuesday, with markets pricing in a high probability of interest rates remaining steady. The U.S. Treasury will be selling 20-year bonds and 10-year inflation-protected tips. The South African Central Bank is expected to announce its policy decision on Thursday, with analysts anticipating a rate cut. Asia-Pacific, Japan, China, Australia, Indonesia. Japan's economy is expected to have contracted in the July-September quarter. Market participants will also be focused on Friday's inflation data. The Bank of Japan is expected to make outright purchases of government bonds on Thursday. China's benchmark lending rate announcement on Thursday will be closely watched. Australian bond traders will be looking for clues from the Reserve Bank of Australia regarding the economic outlook and potential rate cuts. Bank Indonesia is expected to hold rates steady to stabilize the rupiah. What do you think? With so much data on the horizon and central banks seemingly at a crossroads, what's your prediction for the week ahead? Will the Fed cut rates in December? Is a global recession looming? Or are we headed for a period of sustained growth? Share your thoughts and predictions in the comments below. Let's discuss.